Funny. Okay, okay, okay. Oh, good morning, bro. Good morning. Let's see what 9:30 has to offer. I'll put a line over here, but I don't believe this will be the reason for market to give us any sell side delivery. No reason to look for it, but yeah, like at least some retracement or reaction is needed because of the what it calls the settlement is sitting around this 471. So let's see where the 9:30 opens. What is bag stands for? Bag stands for breakaway gap. Bag stands for breakaway gap. The gap that is either partially filled or not filled at all. Is T2 streaming? Today I will finish early, so I want to go for please come every day and learn. Okay. Richard, Rich, I think. Hey, sister, how are you? It was a good day during London session. Simple thing, I don't know why it was so complicated for a lot of people to look for that buy long, especially from that inverted fair value. Now, inversion, I don't want to make things complicated, just the simple thing. I use the leg high to low, the first fair value it has on the bearish leg. Okay, the way ICT talked about it. It's not me. Just in 2024, he has cleared a lot of other things over there. So keep it that way. Yeah, like that's the one that you could use, or you could leave it that way. When this retracement was happening, it was so simple, so easy. New day opening gap, 5 minutes fair value. During that moment, the 15 minutes breakaway gap was forming. However, after the new day opening gap, top rejection, when there was a fair value, this was the change in state, market came back, go higher. That's it. This was the entry. That was literally it. And overlapping with that, the same way, inversion you saw on my Discord, this was the entry for me, and I exited somewhat around this level where there was a 15 minutes bearish fair value from yesterday's PM sessions, something like around this level. Okay, so it was like that. This was a very good opportunity over there. After that, there were a few other things like fair value gap traded, lowest down close candle engulfed, very next candle traded back into the range, the smallest possible fair value over there, expecting that to remain unfilled. That's a regular one. fair value gap. It can be fully traded, but that one I was expecting to remain unfilled. From there, again, okay, then this. So it is what it is. Let's see. 9:30 is nearby. Oh, okay, actually 9:30 started. So the first thing I will be looking for is how far it can come towards that sell side for the settlement is somewhat around this 71 level. I don't need to mark it because I know it's close to that new day opening gap, so I'm not marking it, but I would love to see where it comes towards that settlement, like how far, at least 25% or 50%, something like that will be good enough before we can frame anything. Settlement price, the opening range gap. Okay, so this is the opening range gap high, and wherever the settlement is, I didn't mark the settlement, but I know somewhere here, like see the 71 level, this is the settlement. So let me go back to the extended one. First presented fair value gap is forming, but I don't know if there will be an entry or not. I was looking forward to this level at least, if not the new day opening gap. Now fighting with support. I almost blew the XFA yesterday, and top step had issues too. Yeah, I saw the gap over here. I don't. I believe they will. If it's regarding the technical issue over there, they might clear the losses you have taken. So maybe you can text them or contact the support. I believe whatever loss you have taken yesterday, they might reduce it or they might remove it from your account. I saw that one. I was a bit confused at the moment, then like at the beginning, and then I looked into the what it calls. I looked into the trading view and I found it like, okay, yeah, there is a big or huge issue going on. Wanted to take a sell short from there, but I don't know if that will be a good idea or not. So I'm waiting. If it can break through this fair value, I will use it as an inversion rather than framing any setup, because it's a huge fair value gap. It can go for these lows one more time because there is that relative equal low from 1 minute chart. At the same time, the settlement is lower. So it's that part, but on a bullish market so far, what I'm seeing is maybe a retracement to the fair value gaps that it created, then maybe it can reverse one more time. So I'm not willing to do that. I'm willing to wait and let the market decide where it's willing to go. The sell side, targeting sell side will be a very tough job today because by the way, let the market do whatever it's want to do over there. However, these sell sides around this area on ES, okay, so if you got the idea or not, there was the lower lows, there was the higher lows. So yeah, the way I framed it was based on those things as well. Mid rejection happening, if it can close below this green candle, I will press, otherwise I will hold or wait, because yeah, like it's a very bullish day and so far it's trading inside of that 15 minutes. There is a 15 minutes propulsion block or order block you can call. So waiting is the key over here. Let's see how far is the 25 handle based on my friend Tito's strategy, or if it can come here, then okay, so that liquidity, I don't think today it will be a good idea to look for a sell short. I'm willing to use it as a inverted if it can close above that one, and I'll take a buy long from here. if it can close above only. Okay, so only if it can close, not gonna press before the confirmation. This is already an indication, but anyway, again, I'm willing to wait for the confirmation, because a lot of time without the confirmation I got stopped out for no reason, so not interested. But this is already looking like a indication for me. Bro, can you check? Yes. Yes, has cleared all those lows and the highs as well. So let's see. Because we have a lot of liquidity left over there, and ES is more on the bearish side than the NQ for last couple of days as well. So let's see. The week. Okay, I will keep the ES open on the other screen so that I'm willing to take a buy over here, at least until this, if not that. If it closes above, okay, before that I'm not gonna use it. Three seconds left. I don't know if it will come back or not, but I will try. $255. This is already 122, but I'm keeping an eye on this one, but I'm expecting until that for. Okay. So this will be my initial target, or where I'm looking forward to take the profit, but I will keep an eye until that for. Sorry, like I'll keep an eye here and I will hold until that for. Okay, I'll put it aside. Just this high should not be a reason, because the next level of support resistance is sitting right there, and there is a buy side liquidity sitting at this level as well, like this relative equal high over there now. Let's see. Don't forget, it's already inside of that hourly fair value from yesterday. Okay, that hourly fair value, but I'm still willing to see if the market is going higher or not. Should be all right, I guess. Let's see. Don't want to see it's closing below that midpoint. That will be a problematic price action, but it's okay. Like, as long as I have waited for the confirmation. Okay, so if it doesn't work out, then there is nothing to say about that price action. ES is moving heavily down. Yeah, ES is moving down, but so far it has stopped by a little, or you can call this way, like it has a SMT divergence created around that area, and this leg is already inside of a 15 minutes bullish fair value, so it has cleared this low, the low NQ has created here, so you are looking at something like this, okay, comparing to ES, and that's the reason I'm willing to take the buy, because the sell side is cleared on ES. This is the 1 to 2, but I would love to see it's going for that level today. I'll keep an eye over there because I can probably like close the trade over there. This is already more than $500 if it just taps over here, so that high. See the big fair value gap midpoint, when this happened, what did I say? Like this is already indication to me. Do you want me to close it here or do you want me to hold until that far? Tell me. Tell me. Should I close at this level or should I hold until that? This is not the buy side is until this far, but I marked it because there is the 1 minute overlapping PD array, like the inside of that 15 minutes fair value. Hold the line. Okay, I will hold the line then. Creek. Partial I have taken only one lot, so I cannot take the partial. Could have added more inside, but anyway, it doesn't matter because it was only $255 worth of risk. But let's see, this is the 1 to 2. If it reaches there, I will call that a win-win condition for me, because you know I always take the partial until that, but I'm willing to hold until this level. So it's that. Hold. You have also close. Oh, Nija is saying close. Okay, I'll try to trail. Like if I cannot see any good structures forming around this blue line, I will try to close. 15 second has some structure over here, but I'm not willing to go with the 15 second. Okay, like it has some structure, fair value breakaway gap, new fair value gap this way. So let's see. If it hits there, I will move the stop loss here, because this is the like this is my partial and then the break even take profit. It's until that. Okay, so 1 to 2 delivered, I will call that a boom, but I'm still willing to wait and see how the market is reaching for that level, especially the low of the fair value. And the reason this blue line is there is because there is a 1 minute last fair value gap. Okay, this one, like this. डॉन को पकड़ना मुश्किल ही नहीं नामुमकिन है. Waiting is the key, bro. I told you. Waiting is the key. Waiting is the key. It's not creating fair value. That's the only issue I have. But other than that, yes, I'm willing to see at least this level is traded. If not the level I'm anticipating. Just like that. This is 42 handles worth of move. Yeah, like only one lot. I didn't realize it's only $250 risk. Otherwise, I would take 2 lots from that same entry. All time high में शॉर्ट पकड़ना मुश्किल. ऑल टाइम हाई में शॉर्ट पकड़ना, ऑल टाइम हाई तो इधर है भाई, बहुत ऊपर है, इधर है. It's not just the all-time high, brother. It's the fair value, the unfinished job it has left yesterday. So if you remember, then you know what that buy side is. That's from yesterday's stream. Now I'm seeing some fair value gaps. Now I'm seeing the move 51 handle. Come on. No, 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 not like that. Need to go. At least mid like 25% of that fair value. That will be great. And boom. Boom, brah. At least here, at least here. So I took 200 and closed. Why, bro? Why? Why? Trust your brother. Trust it. At least this is how far you are targeting. That could at least give you $500. Come on. This is the minimum target because of that liquidity and that last fair value from 1 minute. What the hell? Why the stream is this bad? Okay, here. Okay. So that high or that liquidity. Now let's see what market has to offer today. At least 25% risk. I'm happy with that. First entry of the day on New York AM session. 1000 plus secured. Now I'm slowing down. Okay, now I can finish the stream, I guess. Oh, no, I will be here until what? Maybe 11:10. Until 11:10. Okay, today will be a short one because Wednesday I have office. Okay, every Wednesday I have the office. So yeah, like I need to be there, and I'm trying to get a little sleep before I can go to my work. Okay, so important. Okay, why I draw that fib over here? The settlement price was until this. It was trading the bullish fair value from 15 minutes. Okay, I have other charts on my left, so I know what it's doing. Bullish fair value, and a structure. Look at the structure. Now I will talk about a few hindsight things that I think maybe you guys can use the information in terms of participating in the market move. For example, you saw after like trading around this area during the London session, first thing is Asia sell side was cleared according to the silver bullet strategy I have shared. You are looking for buy long yesterday. Okay, how bullish the market was, but Asia buy side was cleared during the London session. What it did, delivered the sell side 3 to 4. Okay, this is the 3 to 4 window. You are seeing at that thing over here. Same today, sell side cleared, buy side delivery. The only thing is you don't have a very good PDRA over here. Okay, like around this area you only have that lowest down close candle. I have saved something on my phone, but unfortunately my Discord server boost is finished, so I cannot share with you guys like the way I was planning to share the video that I have recorded about the change in state of delivery, how you can utilize it, this sort of thing from ICT. I recently found those videos from a Twitter profile, so I have recorded it on my phone. I'll share later. But anyway, when market was going higher, your lowest down close was here, engulfed, very next candle traded into the range. Doesn't necessarily need to trade the opening price, the whole area. After the opening price is violated, this is where you have your change in state of delivery. So whatever the low it was creating, that was your entry. This is where I had a 1 minute inversion fair value retest. I will show from the 1 minute for this one. Okay, so let me actually make it visible on the 15-minute chart so that you can see what exactly I'm talking about over here. Look at that. Okay, this was that inversion fair value. So you are looking for PDRs overlapping within your order block range. Anyway, from there, first fair value, market left it unfilled. New week opening gap broken, new day opening gap broken from the 15-minute chart. How was that looking into 5 minutes? 1 fair value, 2 fair value, 3 fair value. market traded into the third fair value, but you are not entering based on the fair value. What happened the very next candle? This is a higher time frame PDRA, right? So market traded into your PDRA, gave you the change in state of delivery. From there you have that retest and continuation. This is a, like, this is my A plus setup, so I participated in that move, and literally if you check the Discord, my entry was from the lowest possible level from where market went higher because of that inversion fair value. Usually I look into the midpoint of the inversion fair value, like this one. Okay, anyway, again continuation, how it was continuing after trading back into the range. And also this is where you had a 15 minutes bullish fair value gap where market was trading. What was that? You missed that one. Okay, I got your point, but what was that? Change in state. Where did the market came and continued? Why this is a valid change in state? Because you had a 15 minutes bullish fair value. Change in state, you are looking for it to happen inside of a higher time frame point of interest. Wasn't that a higher time frame than your 5 minutes? So another entry criteria or a entry method over there. If you go to the 1 minute, you will see what happened over there in 1 minute. Continued higher, market again engulfed the next down close candle, which is trading into a very small fair value gap. Like this low was trading into a very small 5 minutes fair value. Came back to what? The previous candle's range. Continued higher. Anyway, this is not the case. The thing is, today Shiva did something that I was not forcing him to do anything regarding the trades or regarding the setups, but what he did was very like common sense. Okay, what he was doing is, there was a 15 minutes bearish fair value around this area. He was waiting from here to market reach there before he can frame a sell short setup. Now you tell me, when you are already expecting market to go until that far before you can frame your sell short, why aren't you framing that buy long? Isn't it? And maybe you waited for those structures to form, maybe 15 minutes breakaway gap, 15 minutes fair value. So here you had a very good entry over there. Remember that change in state that I marked from 5 minutes, both of them. Fair value gap overlapping level, got the entry, continued higher. This is not inversion, definitely. I just marked it over there that way. Anyway, so are you seeing that thing? Like, after the 15 minutes bullish fair value is formed, when you are already expecting market to go higher from where you are willing to frame a sell short, why aren't you taking the setup over there towards that direction? That's my question, because you are missing on that part when you're already expecting that can happen. And this is why what's happening is, on a bullish day you are framing a sell short that might not work out. Yes, it delivered after what? After 8. From the 6, wherever the 6 is, this is the 6 opening, like literally the low was here, the 6 AM low was this one. Look, everything has a reason. Okay, this is the 6 AM. Where is the 7:30? This is the 7:30 high. After taking 7:30 high, market came back, took the 6 AM low, then you got your bullish move. So this is a window that will create a high and a low, and you are looking for setup between that high and low. On site taken the same way, the silver bullet, the London session, Asia session, it's all about that. Can you explain why you waited even candle close above the IFVG? This one? Or any of this? Like this one or this one? Just tell me, like, Sijo bro, if this the 547 move or morning trade. Okay, I got it. So maybe you're talking about this one. The reason behind, or I don't know, if this 5021, then I didn't wait. This is where I took my first entry, and after that I got my first profit around this equal highs, this area. So I took 2 entries, one from here, closed the partial, the next one I took from here, and then closed it around this area. Some, like, there was a 15 minutes bearish fair value gap over there, so something around this area is where I closed the second one. I took 2 entries altogether. First profit secured because I don't want to hold it over the new day until it's broken. So once it's broken and the structure I was looking for, I got it, I framed the second entry above the new day opening gap. First entry was until this one because there was liquidity sitting inside of that length. So yeah, I didn't wait. By the way, once I did, nothing is delivered yet, but yeah, like this is the fair value that I was talking about. Only sell short will happen from there, not before that. Anyway, so let's see. So far it has fallen or it has given big moves, but not any opportunity to frame any entry, or there is no possible market structure shift. Only thing I'm seeing over here, the way ICT explained, I will try to share that one. So from this level, stop loss has to be above the high, but this is too aggressive in my opinion, since I have so many fair value gaps that market needs to break. Especially so far 15 minutes or 5 minutes didn't have any change in state. It has now, but like when this was happening, there was no change in state. Do you think we are going down since we have inverted the minute 5 FBG? I believe we should go down because now all we have is the sell side liquidity sitting here. So only thing is I have to keep an eye on this 15 minutes fair value, and not just 15 minutes, there is the hourly overlapping breakaway gap as well. So maybe the new day opening gap is what you are keeping an eye on, and after that if it can go through, like if you can frame any setup from here, your first partial has to be around this area, and then maybe trail the stop loss and hold for the rest. So far it's not giving any entry opportunity going on direction, so need to wait. I'll mark the 15 minutes on to have it on. Oh, let's see if the change in state can happen or not, and the mean threshold is also not too far, so I'll just try to overlap any PD errors around that area. 15 minutes gone, 5 minutes. Okay, so that mean threshold can be area. If market can go back, we can look for an entry. Now we can look into how the ES is working. Where is it? What the hell? Where is my ES? Okay. For some reason ES is not appearing over here, so I'll look into the other chart and let's see where ES is currently. ES retraced back into the 930 fair value, then continued lower. Okay, I believe that is the 930. Yep. So ES was falling, it retraced until this far. It didn't go for that buy side, that level. Okay, buy side was literally this one, okay, like this, but I marked it because that is the fair value gap where market, like this gap is presented in every time frame. 15 minute, the area you can see over there, 5 minute has a similar area as well, which is this one, and then there is the 1 minute one. So 5 minute fair value, I believe it was retracing or reversing from the midpoint of that 5 minute fair value. Yeah, so that is that one. So wherever you have a gap presented in every time frame, that is the gap that has the power to send price lower, and I believe it didn't break that gap either. So that's how it looks. Anyway, let's see where market can reach. 15-minute candle still didn't close. 26 seconds left. I don't really want to see it's closing above that level, otherwise it will be, although we have a fair value gap uh, above this area on the 5 minutes, but it will be bit low probability because it's not giving me the change in state yet on the 15 minutes chart. So waiting. Breakaway gap, fair value gap, let market create some structure. Okay, there is no swing low that you can mark as your market structure shift, so I cannot tell you to go for a setup straight away or go for a sell short straight away. And also, like, 15 minutes still didn't close below that opening price. If it leaves this way and gives us new structure, we can surely go for that one. But for now, I'm keeping it the way it is. I know it's trading back into that 5 minutes balance price range or whatever, like the inverted. But as I said, I'm willing to wait since it failed to give me on the 15 minutes the change in state. I'm willing to wait a little. Okay, so let it do that part. Got it ready. Sorry, just saw your Discord entry. Yeah. Discord, yeah, like I shared it on Discord, but yeah, like I was taking on 3 different devices, so whatever I could do, I did it during that moment. But I was not trying to, since I saw a few of the people are looking for sell shorts, I was not trying to give them any false hope or idea, because I want their vision to, like, since they are looking for sell short, I would love to see, like, if they are thinking about it as a like the analysis, the mistakes they have made during that moment, why the sell short should not be an option or why it didn't work out, this sort of thing, then yeah, like that's what I was trying to give them, that let them figure out the mistakes. Why there is no ES? So as I said, no structure, nothing to take the entry, so no entry. Okay, the change in state didn't occur, so that's why you have to wait. Okay, you have to wait. It's in a bullish leg, it's huge, like so many bullish fair value it has created, and it has created it the way it has created. Breakaway gap, fair value gap, after trading fair value, created new fair value gaps on that leg, came back for the last fair value over here before that sell side liquidity, again traded that last fair value, created new fair value, respecting that fair value, going higher. So far it didn't create any fair value gap, but what if this candle can engulf this, it can go higher, right? So what you have to do is let it engulf the candle and turn this into a order block and break above this fair value, then you can go for the next trade until maybe the consequent encouragement of the new week or the low of the new week. It's not a small range, guys. To make money, this is more than enough. Okay, this is nearly 30 handle worth of move, so let it decide where it is willing to go. Only it was bullish, yeah, I know I have clean sell side liquidity. How can I like, just by seeing one 15 minutes candle, how can I determine that the market is now turned into bearish? I need some PDRS to form. The first PDRS that it could form was that change in state, which never happened. So what I said, since it didn't close, it's now a low probability. Wait for market to again give you the structure that you are looking for. I have relative equal lows over there from 1 minute chart, like this. Okay, like all of them this way. I hope you got my idea, like what I'm trying to give you here. Bro, can you explain once again that consolidation part? What is high time frame POI? Please explain. too many explanations. Higher time frame POI. Okay. Not this actually. Just a sec. Where can I do it? Where can I do it? There are few more, but I'm talking about this. Okay, just this part. I hope you will understand after this. Where can be your higher time frame POI? So think this is the structure. Okay, like market was, this is a low, market was trading like this. Okay, I'll just go straight to the higher, then it is coming lower, but I'll need this structure like this way. So okay, this is the equilibrium or 50% of the range. Below, this is the discount. I'll mark it this way, sorry about that, using mouse of course. And this is the premium. Your PDRs, how the PDRs are formed. Not every time you will see everything, okay? Like you will have one of those. Now there are a lot of other things, but the one or the couple of things that I can give you guys, that's what I wrote over here. Okay, so there are more in between. There are liquidity words, there are mitigation blocks, there are propulsion blocks, a lot of other things, but just these are the main ones that we all know or talk about. So let's start from there. Your first PDRA on the premium or the extreme premium is a previous high, which can be your buy side liquidity or drawn liquidity. Sometimes market will create exact equal high, then continue the opposite direction, because that's your extreme premium range or extreme premium PDRA. After the high, from the body to the high, that range. Okay, so let's say highest body is like this way. Now this thing, we had a fight with, like I had a fight with T2, and recently he said ICT in 2024 has cleared that it has to be the way I said. Okay, like the way I got it at the first place, ICT cleared it the same way. Rejection block is the highest body. The candle can be like, let's say there is another black or down close candle over here. Rejection block can form from there until this way. Okay, like this is your rejection block. Or if this candle has the higher wick, then your rejection block can be from this highest body to that highest wick, like this way. Okay, I will fix the transparency or something. This is your rejection block, like this. So what or how we usually use it is when market was going lower, okay, like let's say it closed below that body as well, you got a change in state, or at the same level, something like that. You saw the first rejection happening. The next time what market usually does is it goes to that area, somewhat around that area, and then it rejects immediately, and that rejection will, like whatever the up close candle will be there, that rejection will be violet. That leg will create fair value gaps to identify a type 2 reversal or something. Anyway, I don't really want to talk about it since I don't use it, but I know how to figure that out or how to mark it. Now, starting from the PD arrays, previous high is your extreme premium array. Below that, or use overlapping with that, you have the rejection block part from the body to that high. So from the body, that is the next PD array. So when price is from the higher coming lower, it's creating those things. Okay, this is the creation of those things. When from the high market is coming lower like this, it's creating those. Okay, so previous high, rejection block. Then what happens? Order block. Order block is what? The highest up close candle. When it's engulfing the body, you know how to mark the change in state, I hope by now. And you also know how to mark how the market will work regarding the change in state. So your order block is the next premium array that it's forming. After that, there can be the first, I'm writing it as a bag because there can be the first fair value that market has created as a breakaway gap. So you know it's a fair value gap, so keep it as a bag, but you can write it as a fair value gap. All these three are the same PDRs, works in a different manner. So bag, you are expecting partial or part of the fair value should be unfilled. Inversion is already, you know, when this leg was happening, the first bullish PD array that market encountered and disrespected, that is the one you are using as your inversion. So that's why I wrote it between the bag and fair value gap, because bag can happen as a balanced price range, same range you can have a inversion as well that way. Anyway, the next one, the fair value gap. After the fair value gap is formed, you might have a breaker block. How a breaker block forms? Market created high, higher high, coming below that low. So by the time it was coming below, how a market structure shift is validated, or when a market structure shift is validated? When you have a fair value gap presented. So the lowest I'm marking here is the breaker block. There are more, but I'm not marking it. Okay, so I believe more than enough. Okay, whatever I'm showing here, this is more than enough. Oh, come on. Why? Anyway, so you will have your fair value gap, your order block around that area, rejection block, everything is happening around between these areas. Okay, from here maybe order block, rejection block, the previous high, I'm marking it just this way. Your breakaway gap will happen around this area. And where is the breaker block? So when market is going lower from a high, it will create those things. Now if you are looking for an entry, what's happening? For example, let's bring it here and let's move it all the way back there, something like this. Okay, so let's say I'll put it this way, type 2. So market from, let's say it created a low or came to the previous low. So what it is doing over here is, when it has created a low, this is a discount array it has created. When it's going for your entry or the retracement or whatever, the liquidity, buy side liquidity, whatever it is, what is it is doing is it's creating the same thing opposite way. So rejection block, previous high or low, sorry, previous low, rejection block, order block, then the breakaway gap, inversion, fair value, breaker, everything it's creating on this leg, and it's going for your what? First thing it's encountering or it will encounter is your breaker block. When breaker block is disrespected, what is the next thing? A fair value gap. Sometimes the better or high probability breaker block will have fair value gap overlapping. Now let's say it has encountered fair value gap and you have a breakaway gap up there, and then at the end you have the order block. Now here is the thing, why when I have a fair value and a breakaway gap, I don't cover the order block as my stop loss? The reason behind that is it has already encountered a breaker block as my first premium array. It has encountered a fair value gap as my second premium array and the breakaway gap as my third premium array. If this gap, breakaway gap doesn't require, like, this is something I'm expecting because it's encountering other PDRs. But if it's breaking that gap, this is already 3 different PDRs that market has broke. So what is the next? According to ICT, not according to me. Please write the word because I don't want to say it. I want you all to write the word. After 3 PDRs are broken, where is the next market going? Or what is the next that market is targeting? So please write the word if you guys know. Whoever know, write the word, like what ICT said about the next target of the market or for the market. Aditya, it's not previous high, bro. Yeah, Shubhanshu Gupta, yeah, whatever you said, that's the word. Okay, your ass. The next target for the market is your ass. Okay? Because it has broken 3 PDRs. You are now praying, oh, if I want to see if market can please respect the order block and go lower. Okay? It's according to ICT, not according to me. Your high probability setup will form with at least 3 PDRs. It doesn't necessarily always have a breaker block because in this case, there is no breaker block. Okay, so let me remove this one. If there is a type 2 reversal, then I have to cover the order block. If it's a type 1 reversal, like liquidity grab market structure shift, then this is the breaker block that you are seeing over here. So you don't have to cover until that far. Just cover the candle that created your breakaway gap. Because if that gap is broken, next target is your S. Okay, so it's that part. Now about the premium discount array, again, when market is creating those, why I'm showing it is because not every time it will be picture perfect. You have to understand when market is not willing to go a certain level and where it is willing to go the next. The reason I'm saying this is because session based liquidity, forget about that thing, but just I hope you got the idea. Okay, like how market creates those things and how you are expecting the first thing it encounters, second, third, fourth, this way. Okay, so this is just some of ICT's premium discount arrays. Now let me go back to the NQ and let me talk about it. So just reverse the whole thing. Okay, or let me actually bring the second photo here as well from GC. NQ. At this area, okay, what did I have from, let me go to 15 minutes so that I can show you in a better manner. What do I have at this area? Previous low, okay, or the next rejection block. This was the yesterday's range or area where market was trading, or the rejection block formed. Forget about rejection block. Yesterday's low was around this area. Market was failing to go for that low. Rejection block, I'm also giving it up, or I'm not marking that one. What's next? Order block. Where is your lowest down close body close candle? Yesterday, from yesterday. Okay, since market reversed from this area, what is the next thing? Lowest down close candle that got engulfed. Order block from here to here. Okay, every rejection is happening inside of what? I'm keeping the rejection parts aside. After that engulfment, everything happening from where? Okay, after this one, when that was happening, when market was giving me the reversal, or this is a 1 minute, even in 15 minutes type 2 reversal, because you had a swing high over here that got violated, so type 2 reversal. So I don't have a breaker block to mark over there, okay, when market was going higher. So what I'm using, fair value gap, breakaway gap, or any inversion fair value. I have utilized that from 1 minute, but I will go step by step. During that leg, how ES was doing, what type of move ES has created. SMT, okay, so type 2 reversal. What did I said? Only looking for SMT when there is a type 2 reversal. Now come to this one. Previous low was taken, now it has created new low. So this is your first discount array that it has created. Then there is a small rejection block or a order block over here, okay. So rejection order block until that done. Fair value or bag, did it kept it unfilled on ES, okay, I'm showing it on ES. Partially filled or unfilled, I cannot use the magnet tool, that's why I have to mark it this way, okay. What it will encounter, breaker, did it encounter? Yes. Body close below? No. Or you can mark until that consecutive ones. Now you look where the midpoints and where the market was trading during that leg, okay. I don't know if you guys can see it or not, for some reason it's not appearing, okay. So I hope you got the idea. Then fair value gap, there is no fair value gap. So your first PD array was that breaker, second was that breakaway gap, and the order block. Market was trading there like ES and NQ, the way you are marking it. Now if you are not confident about this entry from the low, where is your draw on liquidity? There is a fair value gap or point of interest from where market can fall, okay. I have checked it on trading view. There is a very small like 2 tick or something like this, okay, like 93.25, something like this. There is a small fair value like this on the 15 minutes at this level, and there is that last fair value gap on 15 minutes, okay. So whatever it is, this is that fair value gap that market can possibly reverse, or market can trade and reverse from. But since this fair value is not presented here, or since it's a very small fair value, and I have more fair value gaps over here and previous high, okay, like premium, previous high, then the rejection, then the order block, everything, okay, like whatever it is, everything over there. So I hope you got the idea. When this was happening, you didn't take the entry from here because you don't trust the process, or you don't understand if it's coming back or not. But after a huge fair value gap formed, and then that another fair value, the new day opening gap was broken, why you didn't trust that move? Even if you count this as your like accumulation and this is the manipulation, why you are not using that leg to at least trade until this far? Is it a small one? This is 20 handle during your London session. Your stop loss based on the setup in 1 minute, it could have given you like literally, see that fair value, or even like using any of these fair value inversion, or that 5 minutes change in state. After that close above, then the trade, fair value gap formed. You have fair value, third candle slow here, no weak candle, okay, forget about that. Let's put it at the low of the candle, okay, low like the swing low. This is a 7 handle worth of a stop loss. If your risk management allows you to take, let's say like you risk, let's say $250 or something per trade. So how many you can take over here? Nearly 2 lots, or you are happy to go with 2 lots with that sort of risk? It's like $290 or something like that risk. How far can you target? Until this far. That's more than 1 to 2 you are getting. Why aren't you using that? After a 15 minutes fair value retest, market has went through all the lowest down close candles. It has created fair value gap, gave you a market structure shift on that high. Or even if you don't want to mark that high, mark this one, because this one was trading into a fair value gap over here. So this was that high. Now it's coming back to give you the entry. You are not using your change in state or anything. This is why I said like practice, okay. So entry, you don't have to be correct from here all the way back here. And about inversion fair value, I will share like I don't know where actually. Okay, let me try another way if I can bring that photo or not, like a video. It's a video from ICT. I will try to send it to someone on, because that video is important. Okay, like screen record, where is it? Okay, got it. I hope it will give me the full video, but anyway, I don't know. Just a sec, guys. I hope the first entry was profitable for all of you. So I hope this is okay with you guys to not looking at the chart and maybe looking for the learning curve or learning something. Okay, like this is where you're learning. That's why I'm trying to give you guys something over here. I will take that on because there is that breakaway gap and the fair value gap over here. Okay, before market has actually delivered a possible liquidity grab market structure shift, but I'm not willing to take the trade because it's only one fair value so far. I would love to see it's giving me the second break of a structure before you can frame a setup. But anyway, and just 1 minute structure is not good enough for me, so I will just try to save as desktop. Okay, and this one as well. Okay, so I have saved both of the photos, videos. Let's learn something together. Okay, I will turn on the desktop audio and then I will put the videos on, because I believe, yeah, like it's important, that's why. So let's start from the change in state. I will mute myself and let's walk.
Close candle is a bullish order block. That opening price is a change in the state of delivery. The change in the state of delivery is when that candlestick's opening price is crossed right there for the first time. When that happens, then and only then, never before, never another time in the future, that validates this down close candle as a bullish order block. Now, why? What makes that an order block? The fact that we have this bullish hourly breaker, the fact that we traded down into it, and then we see a shift in market structure. Then we go back to the down close candle, the last one, prior to a run higher, that has a shift in market structure there. I don't care if this candle started here, it opened here and went down, or if it opened here and went down. I would draw it right on the opening price. This becomes a bullish order block as soon as that candle crosses it, the opening price. That's the change in the state of delivery. As soon as that occurs, this low should not be violated. So you can now start looking for bullish PD arrays that are in discount. Well, everything's in a discount now because we're so far down. But we have a down close candle right here. So we can use that opening price, extend it forward. Anything in there, buying this, anywhere in this area here, buying that, you can buy that with a stop loss right below there. But look closer. We are now looking at that price range from this high up here all the way down to that low. We trust that that low will not be violated. Why? Because this candlestick was crossed right there. Now what happens, let's play devil's advocate, what happens if it breaks that low? Okay, then you have to continuously study price action and wait for that same instances where we see a shift in market structure to the upside. In the last down close candle, we'll mark the opening price, and if there's a candle that goes above it, that validates the down close candle as a bullish order block. This is only one form of my bullish order block. So we have the ranges here. 75% of the range is a gradient, 50%, and then 25%. So I want you to notice how as price works very close to the 25% of that range, again, the range is the high to that low, we are trusting that it wants to go higher now because we have a change in the state of delivery. When that candle starts moving above that opening price, now we have it. It's in place. We have a shift in market structure. All lights are green for going higher. Look at price. Order flow. What kind of order flow? Institutional order flow. Easiest, right to the chase, no bones about it. Easiest thing is if we're bullish, we want to structure. This should jump off at you.
Was the audio okay, guys? Let me know, because I don't know if you got that or not. I don't know if you got that or not, but this is the first time ever I saw ICT talking about the change in state. So was that something I was telling you for a long time right now? Like for, I don't know, maybe 8 months now I have been talking about it since my market maker model. Now let's go about the inversion fair value gap, okay? How many and where exactly he is marking those?
But it's also in concert with this candlestick's low. It's respecting that old gap. So that makes this an entry off of what? This inversion fair value gap right here. The market finds support here, rallies, takes out high, takes out the high, and trades up into what? The next gap over here, which will be treated as what? An inversion fair value gap. When we drop down, we're taking out sell side here. And we're doing what? We're rallying off of the low of this fair value gap. So this candlestick's high. That's what we're respecting over there. Look at the bodies. It's telling you the story. It's supporting the idea that that is still the underlying narrative. Stops have been taken. Control mechanisms are in place. The algorithm is absolutely respecting that old fair value gap right here. Rallies, order block, touch it. Does it rally higher? Yes. Does it take out a high? Yep. It's liquidity and inefficiency. It's discount and premium. Time of day. All these things come together to make a beautiful tapestry, and you're never surprised. And you're waiting for them to form. All right, so here is the back on the 15-minute time frame. So what happens once we clear this balanced price range here? Remember, we hit the bullish breaker line here. We have all these inefficiencies in here. What happens when we get above it? What can we do now? Well, we have a target up here. That's a draw on liquidity. And then we have now this old market structure high. So now we can take that range and draw a fib from that high up to this target. Now we have gradients. So now we're grading a future price swing that has not happened yet. As soon as this candlestick right here closes, now we run from high to target and we run gradients. And now watch what happens. Around the I have it backwards here. 75% or the lower 25% of the range between the draw on liquidity and the high that was broken. We don't think that the market's going to go down here. Why? Because this is a balanced price range. So we have relative equal lows and they sweep that. Where does that occur? In the lower quadrant of the range from this high up to that draw on liquidity, which is the weekly mitigation block. Then we have consolidation. Where does consolidation form, ICT? At equilibrium, 50% level right here. That's where consolidation is forming. And then what happens? A stop hunt. Lower time frames, look in there, you'll see it. Rallies up. Another time here. And what happens here? At the upper quadrant from the draw on liquidity to this high. We're anticipating new price points that surge higher. We rally up, then we take out the liquidity above that weekly mitigation block. And then we consolidate going into Friday, New York session. This is a 15-minute time frame on Friday, and we're consolidating. Markets do not top like this, folks, especially ahead of news drivers. We've consolidated, we're part of a bullish run, and we're expecting capitulation to come in, and that's what we're seeing. But
what I'm about to show you is easy.
Now, was there anything that was valuable? I don't know, like if you guys got anything out of it or not. So when there is that fair value gap, okay, like 15 minutes fair value at that leg, that is what? That is just a swing high to swing low, the first fair value. Why you can use it as a inversion? How you can use it as an inversion? You are seeing it from ICT, not from me, okay? I'm showing, like, I got it, I'm lucky. Sometimes I barely go for the Twitter, and sometimes I look into those sort of thing. I don't read any of the ICT's post. I look at ICT's comments. Inside of that, other people comes with this sort of videos, and I look for those. Anyway, this is me seeking for knowledge. That was the bearish fair value before that high. After the 930 open, where was that market trading and then going higher? Or overlapping PDRS, where did it came and went higher? Anyway, I mean, I hope you by now got the idea, like where you have multiple, like inversion, which one you are using, it's up to you. I marked here as the inversion. I marked here as the inversion. I didn't mark here as the inversion. Now, why I didn't mark here as the inversion? Same reason why I didn't mark. Okay, I will go back to the video on one more time, and I will show you from the video.
But it's also in concert with this candlestick.
Here ICT had the inversion, right? But he didn't mark this one, but he marked the upper one. Why? He didn't mark this one, or there was a small fair value gap right over there, the bearish one. He didn't mark as inversion, because this is already like where you are getting your market structure shift. So it doesn't necessarily, like, you have your bullish PDRs over there to support. So why are you trying to force the market with a bearish on to work as your point of interest? When I was looking for the inversion, I had, oh, hope I didn't close the whole thing. Okay, yeah. Okay, so here I had no bullish PDRA except for that order block. When that order block was retested, there was no fair value gap forming over here. So what I had, only inversion. How did it work? This one, how did it work? I have fair value lower, but what is this fair value? I don't want to see this fair value is getting filled. It is the first fair value of this, from this swing low to whatever high it is forming. I had one over here, but since the change in state on 5 minutes happened until this far, I was expecting what the next PDRA that can stop the market from going any lower from that fair value or from that low. So this is that PDRA. It's okay, like you will understand it. With time you will get the point. So I don't know how informative it was. I was trying to like post it on Discord, but unfortunately I don't have the Discord Nitro one anymore, so I was unable to deliver that one or provide that one. With the volume imbalance, that one was traded, but this is the one that I would love to see how market has traded over there. The first one or the second one of the leg, the extreme one. Okay, this is the breaker. Since I have a high low higher high, so this is the breaker. After confirming the breaker with this candle, market has traded back into the range, came lower, created new PDRS. So I would love to see how market is continuing lower below this low, and if it's creating new fair value gaps or not. Maybe we can use that fair value to look for the sell short, but so far I'm not looking for any sell short over here. Anyway, the consolidation happens around 50% of the unfilled measuring. Yeah, exactly, 50% equilibrium level. That is the most important level of any move. And if you are looking for anything, for example, always do this. Okay, like, let me actually use this one so that there is less level or something. Previous day high and low, you can mark it this way. So this is the previous day's expansion range. Okay, so 50%, whatever the PDR is above the 50%, that is most important. Whatever the liquidity you have, from there you can maybe look for that, if you can identify the liquidity. For example, I'm not willing to go for the sell short or any trade, since I have got the profit I was looking for. However, see that 50% of previous day, you can mark both. Okay, previous day and the day you are seeing over here. So far, before the market, like before 9:30 open, whatever the high and low was, you could mark that range as well, and with time you can extend it higher that way. I don't know if you got what I'm trying to say over here or not, but yeah, like from the low before the 9:30 open, wherever the market was, until that far. So maybe from the low, today's low is here, and 9:30 is until this. So this was the high. Okay, if it makes any sense to you. Before 9:30 the high was here, so London low until the high, this was the equilibrium. This is where market traded before that move higher. So hope you got the idea. Two ways you can mark it, which is from previous, because that is your range. Okay, previous day high and low is your range, and so far the intraday. Okay, like we look into the London during London session, Asia's liquidity, so we can look for that, whatever the low and high it has created during the Asia session. Then after the London clearing the buy side, you can look for that. Already you know, like here it has cleared sell side, so we know already it's in deep discount. From there it has started going higher. So if you are trading near KM session, whatever your London session to the before the New York AM session opening. This was the opening, okay, 9:30 open. So the highest was market until this far. Market opened until this far, traded back into the equilibrium or below the equilibrium, which is your discounted range, and then it continued higher for the next premium array, which is this array. The only fair value you have around this range, that array. Okay, so it's that. So that 10 a.m. 15-minute candle CSD for that 9:45 candle. Close below can only look for short, right? Yeah. The one that didn't close below during this leg. The one that closed below. See that area? Where the market is mostly getting the rejections or consolidation you are expecting around that 50%. It's that, okay, around that range, like close overlapping that range, something like that. I have marked all the possible sell side liquidities. The reason behind that is, you know by now that once it takes or clears one, how far it has reached towards the other one, like how close it has reached, so that we don't fall for any fake breakout or fake setups towards the opposite direction. I would love to see some fair value gaps forming on this leg when it's going below that low. Highest probability bearish PD array will be above 50%. Yeah, exactly. Like it's vice versa. So in discount and in premium. So for a bullish PD array, it will form in discount. For a bearish PD array, it will form in premium. $21 for 24 taken would be awesome today. Just my thought. 21 for 24. Yeah, I got your point. I think you're talking about this low. So there is a fair value gap over there, but I'm not convinced yet with that one. It has came there, but anyway, there was the breaker. That was a possible area, but again, only one fair value, not interested. Same thing here. So far, not seeing enough strength toward the sell side. And 15 minutes, I don't know if it has given any change. Okay, it has so far didn't give any change in state. Let's see how the 5 minutes is looking. So it's holding within that area where BC, CB, BC. Is this a balanced price or what? And even if I just put it like this way. So far there is a 5-minute bearish fair value gap and it didn't create any other. So would be great if I can see new fair value gaps are forming. No 15 minutes change in state. I'm not rushing into a trade yet because market was bullish. Should not be looking for a trade or setup. The only thing that I'm afraid of is, like, let's say even if you take a setup, since it is creating relative equal lows, this is the fair value that can again send the price higher. So you have to be careful about that fair value, because after trading that 930 one more time, it has literally expanded higher, cleared the buy side, it delivered until that fair value gap. Like so far it's still trading within this fair value gap range. I know it's broken, but since there are volume imbalances and bearish fair value gaps overlapping over there, so you have to wait. At the same time, see that engulfing, it has closed above this level and that is exactly where market is literally having all that reactions. Okay, because this whole thing is your maybe 5 minutes change in a state candle or order block. I would love to see bigger moves before I can call it a trade or something. It's that equilibrium level where market is creating all those things. Okay, I just showed you from the video, and that is what you're seeing. So bro, the moment it enters into the rejection block, we can check for reversal. If high low the block is taken, it is a sweep, and again looking for reversal, right? If you're trading just based on that, yes you can, but use enough. Like, why, my question is, when market was rejecting, okay, from this area, when it was rejecting after, first of all, why you are looking for sell short? If you are trading London session, I have said in my silver bullet strategy that wait for the sell side or the buy sides, one of those to be cleared, and you are framing the opposite. In this case, it was clearing the sell side of the curve. So when the sell side was taken, you are looking for buy setups only. Why you are waiting for market to reach to a certain area from where you are going to frame your sell short? Why not taking the buy long when it is going there, and call it a day when you get the profit? I got the profit, I'm not willing to, like, frame any more setup. I'm done for the day. Okay, I have got already more than $2,000 altogether using the London and using the New York AM session first trade. So I hope you got the idea, like why you have to wait for market to reach. If it's a long range that you are expecting market to go, if it's good enough range that can give you the profit you are looking for, why aren't you doing it that way? Like, why aren't you taking it that direction? And it was a bullish momentum, it was even better for you, right? When the bullish momentum is there and you are looking for market to reach to a certain level before you can take a sell short, why aren't you framing the buy long first? Then use the profit for your sell short. For example, I got my profit, so if I take a sell short and I get a stop out for any certain level, I believe that will still leave me with a lot of profit. It will not give me loss. I need that fair value gap over here. Let's see, I'll keep an eye on this fair value gap, but still I want to see how market is trading, and stop loss is just at the fair value gap high, because I believe this should remain unfilled. Unfilled means partially filled can be okay, but not fully filled. Okay, so this was the area where I could add, but anyway, it doesn't matter, because it has cleared that liquidity traded very close to that fair value. I'm willing to see how the market is trading into that fair value. I'll keep the 25% level as well, because chances are high it can trade until this far. If I'm right about the direction and the sell side, then it will go through the 25 and the 50 as well, but yeah, let's see. This was the entry for me, but it has already cleared that sell side. That's why I'm not too confident about that entry. Otherwise I would add over there. First entry is, since I'm expecting it should remain unfilled, I took the entry from that level and covered just the fair value gap. So I'm willing to see how these are working, the grid levels, the 25% and the 50%. Need a big move now, right now, like after trading that propulsion. Big move. Yep. And definitely want to see it's closing, it's not rejecting. If it rejects, I have to market execute and close that trade, because I want to see it's closing below that 25% so that next candle can close below that midpoint. Stay below that 25. I would definitely would love to see this candle is staying below that 50 as well. First one that I expected or wanted, I have seen that. The second one, I would love to see it's closing below that midpoint. Would love to see now it's closing below that midpoint. This is a regular fair value. It can be fully traded, but I don't want to be a part of this trade anymore. Like once it has reached for that midpoint of the fair value, it was giving me good enough profit. Okay, until this far it was $325. But anyway, I'm expecting market to reach for that low. Let's see. If no fair value gap, I'm done with the trade. That's why I put it at break even. So doesn't matter. Not looking good at all, but let's see. Until that candle is getting what it calls engulfed, I'm still in the trade, and this is where the stop loss should be. The reason behind that is this up close candle, market after engulfing it has traded over there. Okay, so I don't really need to see it's coming for that level one more time. So this is the moment of truth when market will go through the fair value. Even this 930 will not hold the price. I know the mid is rejecting at the moment, but it should not hold the price. It should reach for this level. I have more liquidity is lower, but the reason I'm targeting until this far is below that I have 1 minute fair value gaps, and also like the 15 minutes fair value gaps are overlapping around this area. So I'm just holding until the nearest liquidity, and it's giving already, it has given me more than what I was looking for. Okay, this is where my stop loss was. This is already 1:2.32. So I'm already like done with the trade at this level. This is already that 1 to 2. Okay, so I'm happy to exit out of the trade at this level. If I had like if I added a lot over there, only then I could close a partial and hold the rest at break even or around this level, somewhat around this, as my trailing stop loss or break even stop loss, because that entry could still deliver until this far. Hey Master Trader, how are you, bro? 1 to 2 is the king, bro. 1 to 2 is the king. If you are happy with that, okay, once you are happy with that, you will find your trading life is very easy. Forget about liquidity. Okay, just this way, every entry you are taking, targeting 1:2. How beautiful, yeah, 1:2. But the only reason I'm holding until this far is that measuring gap, nothing else. Remember where these were happening? Everything was happening. Where everything was happening at the equilibrium level. So when that fair value formed after trading that fair value or whatever, like that short term high was taken, then it created that leg, broke the structure. This is that fair value that I'm willing to see acting as a measuring gap that can act something like this. Either market not trade it at all, or even if it trades, it will partially fill it up. It will leave the portion unfilled. So from the high to the low of that measuring gap, I'm measuring it, overlapping with that liquidity. I'm going for that liquidity. Yes, I have more liquidity. Why I have to be like, think more than $1,000 on this leg, another $900 on this leg. Why the hell I have to be, looking for more? Okay, I have equal lows relative. Why? Isn't that enough? Isn't this enough already? Like whatever, $580. Forget about that first $1,000 entry. Isn't this enough already? See that measuring gap overlapping with this is my liquidity. I don't care if it goes there. I'm already profitable. First entry gave me 1,000, second entry I'm already seeing another $600. And remember, this is from yesterday till now the same way. I have taken 3 entries. All 3 of them gave me the profit I was looking for. It has already delivered more than my 1 to 2, but still I'm willing to see how the market is coming for that sell side. I don't care if it goes for these liquidities. All I am happy to get out at that measuring gap, the level where I got the measuring gap overlapping, the liquidity where I got it. I don't even want that $5 more at this level. I'm happy with that. Okay. I showed you why that was a measuring gap. That was that 0.5. After that consolidation at that 0.5 range, this was the close proximate fair value gap within that 0.5. That's why that was a measuring gap. Okay. That is a boom for me already. Oh, bro. Trading too hard, man. Too hard. Too hard. I'm on a different mission. Should I trade December month? Why not, bro? December is the month. I told you. Like, this is the month for me. My highest ever payout came out of month of December. I don't care if it goes for that low. I would wait for this fair value to be broken and then I can have more levels to mark. Okay, so it's that. Done. Boom. 2 entries. Okay, buy side, sell side. And this is that entry. Why I took that entry from the moment it confirmed the fair value, I took the entry. Where did I put the stop loss? At the level of the fair value gap high, that level. Because I know how that should work. The exact same entry I took on Monday. Okay, yesterday. After that 9:30, this fair value, when I had a entry over here, I trailed it too fast and I got stopped out at this level. Remember, like I took the entry from somewhat around this area. and got stopped out at this level with a small profit. After that, when the first fair value formed, this is where I took that entry, because that is where I had that unfilled fair value and I marked it. A stop loss, same way, just at the high of that fair value, which was here, and then targeted until this low as my first partial, and there was the 15-minute fair value gaps low as my second, which happened around this area. Okay, after that, that was the first entry, the profitable entry. When this was happening, there was this fair value gap that I marked, it should remain unfilled. Where did I press my button? Right at this level. When the fair value got confirmed and the very next candle traded into the range, I took the entry from there. Got stopped out, came back, re-entry, boom. This was the leg where I got the... Anyway, it's easy, man, it's easy. As long as you spend enough time with the chart, as ICT says, okay, what ICT says is... as ICT says is, you have to marry the chart, okay? You have to treat the chart the way you will be treating your wife or something. So you are paying attention to everything your wife is saying, or what sort of, you know, expectation they have. I know for a fact it will take this liquidity and reach for the new day, because here it's just a 1 day. It has already broken so many bullish PDRs. But why I didn't hold? I don't need to, man. I don't need to. Why I let the market do its job and then do what I want to see from the market? Let it go, bro. Let it go. Wait for the setup to form. That's the thing. I was literally saying the first market structure shift I'm not gonna utilize. If it can give me the second break of a structure, that is when I will look for the entry. Second break of a structure happened just simply here, okay, with that higher time frame point of view. Forget about that breaker block. I just showed you like high, then the order block, then the breakaway gap, then the breaker block, how the PDRs are formed. I have showed you right before this entire thing happened. After the first break of a structure, I did nothing. When market created this low, after that break of a structure, this is market structure shift, or you can mark it as MSS, and this is your BOS, or break of a structure. Okay, this is your break of a structure, or you can call it boss. I have a caps lock open, so okay, this gap. Why this gap should remain unfilled? See that liquidity grab happened again using that higher time frame point of interest here. That is also overlapping with what? Your breaker block low. Okay, forget about that breaker block. Simple, higher time frame point of interest, the low was traded over there, a liquidity grab happened. You had a market structure shift right here, overlapping PDRs, high or as your rejection block, order block, traded into the order block. Now here is the thing, okay, this is me marking all those things with my eyes. Violated the mean threshold with one candle, very next candle closed below, didn't close above the mean threshold. After closing below the order block, it should not go back to the mean threshold. Anyway, after trading that propulsion block low, especially here, okay, this candle traded back into that propulsion block low, created fair value, should remain unfilled. At the same time, what level was that fair value that I showed earlier from the daily chart? Like all those consolidations were happening at the midpoint. This is the best day ever, man. This is literally the day where I showed you how ICT was talking about these things, and I had the exact same thing happening right in front of your eyes. This is the best day. I just showed you 2 videos regarding the grading, how you should grade your levels and stuff, and literally that is exactly what you saw, and that is where you got it. I'm happy with all this. Come on, high to the measuring gap low, not projection. The projection will also do, because that's the one standard deviation, which is also the same thing. The measuring gap is literally the same thing, one standard deviation from the high to that measuring gap. If it's a measuring gap, it should remain unfilled like that way, partially filled or not traded at all. For example, yesterday it didn't trade that at all. That fair value was literally untraded yesterday. That small fair value gap that it created, it was untraded. Even this low failed to trade that fair value here. Okay, it was untraded even with that low, so it can leave it that way. That's why I pressed over there. It's the same fair value gap. It can leave it that way, or it can just trade into that and then continue the leg. It's that. Anyway, I'm happy with the day. 2 entries, $2,876 profit altogether. Okay, including my previous profit as well, but it is what it is. I have more sell side below, but for that I would love to see how it's breaking this fair value. Before that, no entry. Okay, it has taken this liquidity, happy with that. It has traded fair value continuing lower. Now you have a point of interest that you can mark. New leg forming, you can utilize that when market will be below that level, especially if it can close below that new day opening gap and close below the midpoint of that fair value, because that will give you enough opportunity or enough option that okay, it's possibly breaking that, since it has broke that new day opening gap, which is the second highest fair value gap. It has taken this liquidity. It can even continue higher as well, so wait until it breaks that. I'm not targeting the whole thing, man. Just target the nearest one. Good enough. Done. 3K copy traders don't know what they are. Streamers don't know what she doing. What happened? Okay, let me see. Nurses, okay. We'll watch the stream again. Full of them. Thank you. Thanks, sister. Thanks. Lol, exactly. Alex, what happened, Alex? Where is Alex? I'm sorry if I have missed all of your comment. I will read now because I'm happy with what happened. Delicious honesty too. Boom for pro. Man, you're so good, brother. I have never had more confidence or been more profitable until I came to your channel. Thanks a lot, bro. Thanks a lot. I'm so happy to see that you guys are learning. Man, you have the best live stream, brother. Oh, Alex, thanks a lot, bro. I believe you all will have the same thing. Okay, like it's just about giving time to the chart. Don't trust me, I don't want you guys to join me every day. That is what I'm trying to give you guys for a very long time. Don't join me every day. The time you are with me, maybe you are learning, it's okay, but once you have something to test or check on the chart, back test, forward test, whatever it is, this is when you stop watching new videos. For example, I'm not watching ICT videos, 2024 mentorship, anything like that. The reason behind that is I have already a strategy that is proving me as a profitable trader. I'm getting, or I'm making money based on that. So I don't really want more things or new things to clutter or to confuse me when I'm trying to trade. That's why when I was showing the PD array, I choose the ones that we all mostly know. Maybe I would even give up on the rejection block. I don't use rejection block. I had to know how that rejection block may work. That's why I learned about it, or I went through the videos and checked for it. But I don't use it because I don't need it. Fair value gap is enough. Only you need to know where and when you are looking for that fair value gap. Remember the first time it was coming here, even though there are so many, did I framed any sell short? Even though because there was no sell side like market structure shift happening on that leg. At the same time, the 15-minute was failing to give me the change in state of delivery over here. So when that was happening, I know for a fact that it is a low probability already. So I didn't even look into the 5 minutes on. But here, what's happening now? After taking that liquidity, what's happening now? Market has left that breakaway gap. Market has created a fair value gap here, a fair value gap here. So from this high until whatever low it's creating, this is your breakaway gap, this is your entry fair value gap. Let it go below that. Let this part of the market go. Okay, maybe I would hold until that new day opening gap high, because that is a point of interest where market can go and then reverse. But until this, I'm happy. I'm not targeting until the extreme low. Already I'm getting good enough profit. I can call it a day that way. Okay, After this, if it can break through this, now I have what? The liquidity only. So now I can look for that liquidity level. I don't know what that black box was for, but whatever it is, now I can look for that. Okay, so wait until it breaks this. You will still have enough room to look for sell shorts. This is 37 handle, and there is literally nothing at this low that should send the price higher except for that fair value. So if it can break through this, you can take partial below those lows, but final take profit should be here until this far. Take partial, move the stop loss to break even wherever your entry you have framed below that fair value gap, then move it until that, like the rest of the profit you are taking until here, because I don't believe this time if it comes for this liquidity it should stop before taking that liquidity. The same way when it was going higher, not just this liquidity was my target, I was targeting until that level, remember, like something around that area inside of that, because there was the 1 minute fair value gap here. This was my buy side. Okay, I didn't mark these as my buy side, I marked this as my buy side because I know at least this is where market should go before it can fall. This is the fair value, even there is this fair value and that fair value overlapping in every time frame, 5 minutes, 1 minute, 15 minute, every time frame there is that fair value gap. So it went there, it continued. Now it has traded, see it's failing to break that midpoint or that new day opening gap. You are done until the top of that gap. Okay, if it can break through this, it's giving you new point of interest from where you can frame your next setup. So this high can be protected high when market will go below that. So if you get new fair value gaps around this, you can put your stop loss maybe above this high. It's leaving this as a breaker that way, like you are waiting, you are letting the market create the structure for you. After that you are framing your setup. I waited, okay, I didn't take entry here, I didn't take entry based on that breaker. I waited until the second break of a structure happened. After that I framed my setup. So waiting is the name of the game, patience is the name of the game. I hope you got the idea. So yeah, I mean, it is what it is. I believe you guys will understand what I'm saying. Okay, so you are not speculating that it will take or clear those lows, because we have CPI tomorrow if I'm not wrong. So it can generate, yeah, so tomorrow we have CPI, so it can generate liquidities for tomorrow as well. So these can be the target for tomorrow's news time, whatever, like I don't know, I don't want to be that guy, but until your higher time frame point of interest is not broken, you are not looking for the move until that liquidities, whatever the nearest one, whatever the next one. What is that? Do you know? This is the hourly breakaway gap inside of a 15 minutes breakaway gap. Okay, see that hourly and 15 minutes. Let's go. 5 minutes entry fair value, 5 minutes breakaway gap. It came until that breakaway gap top. Okay, before it's giving you that fair value that is presented in every time frame, brother. I'm talking about it so many times. Look for the reasons, you will get the reasons. Fair value that is presented in every time frame. Look for the reason, you will get the reason. 15 minutes, hourly. That fair value is also available in 4 hours as well. So this is a real fair value gap that you are looking at. So you cannot hold until the liquidity, until that area is broken. So I hope you got the idea. So yeah, I mean, I believe I have done enough for the day. I don't really want to be part of the market anymore. And after tomorrow's trade, I will be requesting the payout from that 100k account that I'm sharing the screenshots on my Discord. I will be requesting after tomorrow's trade, because that will clear the 5th day, or that will give me enough profit to request at least 50% out of it. So I'm targeting at least $3,000 or $4,000 as my payout from that account in US dollar. So let's see how far it goes, or how it goes. It's that 100k account. Same thing is happening with the 50k as well, because copying most of the time. But yeah, like I'm building the 50k account, and I'm gonna withdraw from the 100k, because 100k has at least $3,000 the max loss limit or drawdown limit, but 50k has only 2k. So I'm planning to build the 50k at least until 4,500, which I can use as a 150k account. Okay, like I hope you got the idea, by the drawdown limit, so that when I'm trading that I can trade fearlessly. One single fair value on this entire leg. Okay, and look at that rejection so far. If it leaves it that way, then you are expecting a very volatile move that should take the market, like in a 15-minute chart, that should take the market all the way below that fair value area. If that happens, only then you are happy to go for a sell short using that last fair value as your inversion fair value. But at the moment, I'm thinking this fair value may not hold. Okay, it may not hold, since I have higher time frame. For example, hourly, it has just one candle that even failed to give you the change in state. Traded the last fair value from the hourly. What happened now? Where is the body going back? Inside of the first fair value after trading the last fair value. How it is going? Leaving it as a breakaway gap, partially unfilled. So no strength on the hourly for the sell side. Okay, until that happens, until a new fair value gap forms. Even on the 15 minutes, the second fair value gap forms. You are not looking for sell short. Why? Here, remember what I said about this when it failed. Remember, there was the entry that I trailed until this far, so that if it fails to create the fair value, it can take me out of the market. Why? One single fair value. What happened eventually? There is also candle over here, but unfortunately trading view had some issue, so it didn't give us that candles or those candles. But I can assure you from the top step, I can assure you from the trading view, top step has some issue over there. Or whoever is using let me, one single fair value gap. Okay, that's how it looks. Broke below midpoint. Every time I see something like this, what do I say? That's an indication already for me. Okay, that's that indication. Anyway, one single fair value gap in a move is not good enough, when especially after a big fall like this. Okay, even the same thing for this one, but for this one we had already created the new fair value gaps from a hourly fair value, which is the higher time frame. That's why I was looking forward to this. If market can break it, only then I will go for the next fair value gap trades. Okay, so above that high, that fair value or this fair value, this is the breakaway gap, this is the entry fair value or the second fair value, or the premium discount arrays, even from this to this. Okay, premium discount, it went above that equilibrium where I had hourly. I think on the hourly chart there is a fair value gap overlapping that level. Yeah, so fair value gap inside of that, above that equilibrium, from there it continued lower. Okay, and also don't forget about that one single down close candle that engulfed all of them. So change in state started from this, or the order block started from this, however you want to mark it. Especially in my market maker model, I have talked about it, like candle or candles that have cleared the buy side, it's better if you can look into those candles. So buy side cleared by this candle, and this is exactly where market was coming, like from here to here, this is where the market was trading. Anyway, it's inside my market maker series. If you haven't watched it yet, you will find it. But same thing, you are looking around this area. Let's see what happens if the change in state happens, if the new fair value gap happens. Oh, okay, this is like this chart is 10-minute delayed now because I haven't connected to any broker or something. It has changed everything. It has changed everything. Oh, okay, I got it. It's because I took the other window over there. Anyway, so this is that. Let's see how the 1 minute structure is looking. First fair value traded, also that inversion happened over there. Second fair value is also violated. So this is the leg where if you get enough what it calls new fair value gaps, you can maybe aim for the next 15 minutes bearish fair value that it has created. So until this side, mark this as a buy side and look for the 1 minute fair value overlapping that area. So okay, so this is the buy side, and I will maybe go until that far because that no weak candle and the 930 fair value, if it can create the fair value gap on this leg. Not a big range or not a good range, so better to avoid that session, that part. Okay, there was a fair value here, but anyway, I'm done for the trading trade, or done for the day. Let's see how that holds. Yeah, so that can be the second break of a structure. Let's see what happens if market is willing to go until at least that far or not. This high is at the 15 minutes bearish fair value gap, but I'm expecting at least until this far, since there is that no weak candle. And if it can go through the whole area, chances are high it will not respect the bearish fair value. This is permissible because that's the order block it is trading. So as long as it doesn't go below that low, it's permissible over there. And best part is it has traded order block, it's closing inside or above that fair value. That's the best case of scenario over there for a higher move. And the fair value it should form over here for maybe deeper move inside the fair value of 15 minutes. This one should remain unfilled if there is any fair value. If it doesn't remain unfilled, then chances are high you have to close your trade earlier. So it's gonna create a fair value that should remain unfilled. Small big doesn't matter, need a fair value gap to form, and this should remain unfilled. So it's the same way until it can reach above that high or at least that level, whatever. Like if there is a small fair value, there is a one tick fair value gap, but not liking it, maybe it will not be there, so it can come back for the propulsion block trade and then again give us the fair value gap. But by now this is your stop loss because it has already traded the order block. It doesn't need to take this low anymore. So first entry based on the fair value, third candle, since one fair value gap, third candle's low is your stop loss. The moment it has traded that order block and expanded higher, this is where you're putting your stop loss, and this is the propulsion block that market can create a new fair value or not. You can even trail it bit higher because of that propulsion block. You don't really want to see it's getting violated as well, like this. Okay, so you can maybe put it until this far at the top of the fair value gap or at break even where you have taken the entry. Trailing is like something you, if you are willing to do. For me, I always look into at least my first partial is hit, then I will trail the stop loss. Before that, if I trail too early, for example, if I leave it here and this is 1 to 2, okay, so whatever the 1 to 2 is, I don't care just about the liquidity. This is what I'm targeting. So if this is my target, after market reach there, I will trail it higher at a certain level where I have seen some new structures. For example, let me move it aside. If this move can create a new fair value, this will be the third candle's low. So I will maybe trail it until this far after it reaches to that level. If the whole take profit is not happening over there, I would love to leave it where the initial stage, like where the initial stop loss was, because I want to see if it work out or not. It trail it, if it hits my, like for example, it has hit my trailing stop loss because I was trailing it too fast, because I didn't get the fair value that it should form after trading that propulsion. So if this is not the propulsion, it should create a new one, then it should deliver the way I'm expecting. That's why I'm happy to keep it until this. If it hits, this is the trade that didn't work out for me. I'm willing to take it. Okay, so let's see. I'm taking it because this is how I let the market do what it's doing. Okay, it's not a high probability anymore since it broke below that fair value gap, but still I would love to see, like, the mean threshold is getting respected one more time. If it can close above that fair value and through that order block range, I would love to see it's not coming for that mean threshold one more time. Okay, so wherever the initial entry was, this is where I took the entry, and 1 to 2 is here. This is where I'm closing the entire trade because it's only one lot. But how I trail is, after that is hit, I will trail it at the break even or the new structure it is forming. It's that. Okay, so it's that part. Because if you trail too early, you will never know if your strategy was a valid strategy or not, and what is the actual win rate of that strategy. So this will be your new propulsion block, since that has the lowest down close candle or body. So after trading here, if it can create a new fair value, for example, now I definitely don't want to see market is coming for that mean threshold one more time. So at the mean threshold is where I'm leaving my stop loss. Even better if it doesn't go below that midpoint, like close below. If it comes for the mean threshold one more time, I'm seeing that market will come and take that low as well, because it should not trade after trading that. It's trading like, okay, so it stopped me out of was there, yeah. So as I said, like, if it rejecting from the mean threshold, this time it's not going higher anymore. It's leaving that 15 minutes fair value as a breakaway gap. It has cleared that sell side. So I know that my strategy for this specific entry didn't work. Okay, it's that part. So I'm letting the market do its job so that I have reference. I have the statistics of when and where it didn't work. It's the similar situation that happened yesterday as well. When market created that 15 minutes fair value gap, it didn't trade that fair value. It came until that far, very close to that fair value level. This was where, like, from 15 minutes chart you will get. Okay, it created that fair value, came until this far, continued lower without trading that fair value. It's the similar thing happening right now. So you have to wait for one more dive. If it can break through the fair value, you are looking for sell shorts, you are not looking for buy long. But if it fails to break through that area and gives you the new structure, that is when you are framing your next setup. I got before you go, can I say anything about my stupidity, like where I'm doing blunders, if you have seen any? The blunders I have already said, Shiva, like, if you are expecting from this area market to go for, let me go to the 15 minutes and mark it. Okay, so if you are looking for a sell short setup from this fair value, let's say like from this fair value, and market was here, why aren't you taking the buy long until that fair value? Because it has cleared the Asia low, it has traded above the new day opening gap, overlapping PDRS from 1 minute or even 5 minutes, whatever it is, like however you are using your new day opening gap. Why aren't you taking that buy long until that, and whatever the profit you are getting, since you are expecting market to go there and then you are looking for a sell short setup if it can form. So why you are letting all this run go, especially when this was broken on the 15 minutes as well. So Okay, it was going higher. 15 minutes candle, broke above, traded back the top, then went higher, created new fair value, traded back into the fair value. Why aren't you utilizing that leg and this leg, the fair value gap retest leg as well? Why aren't you using these to make a trade until this? Because the profit you will get from this trade, that is the profit you can use for your sell short as well. So you are not risking any of your own money. That's the problem. And if you don't get your sell short setup, what are you doing over here? The profit you got, you are already, you can close the day in profit. Why you have to, like, I hope you got it by now. Like, when you have this expectation already, why aren't, like, from here you are expecting if market can reach there, you are going to frame the sell short. So why don't take that buy long until that fair value gap, from where you can look for the sell short. The profit you are already making on that leg, that profit can be the risk you can take for the sell side delivery if you find any setup over there. Even if, let's say, like, you framed a setup from here, a stop loss you put above this, you should not be, but let's say, like, you framed a setup, and by the time market went higher and stopped you, whatever the profit you made in this entire leg, you will still have some profit left. And since your sell side didn't work, you took a profit and a loss, you are still in profit, so you close the day as a profitable day. That's the correction for you. For example, I never had to press the button over here, like the button I pressed. But why I pressed it is because I was giving you guys an example. I was talking like why I don't trail it early. I let the market play out over here. It has traded the min threshold, rejected. Where did I put it? Here. So I just reduced the risk by how many handles? From here to here? Nearly 5 handles. Okay, so I reduced $100 risk, because after it traded the order block, first of all, it doesn't need to come back for the min threshold. That's the one thing. And after that type of rejection, when the next time it came, it rejected from the min threshold, and look at the candles. Okay, like how it's engulfing the previous down close candles. When that happened, it doesn't need to come back for that candle one more time before it could take that liquidity or whatever. Like, this is where the 15 minutes fair value gap is. So before it could go above that high, and then it could give what we are seeing over here. So when the next time this happened, what is that indicating? That market is not willing to trade that fair value. It is willing to go lower. And how far low? It can go for the sell side, but what you want to do? You want to wait until market is closing below this from a 15 minutes chart. Not 1 minute, not 5 minutes, nothing. Because this is the 15 minutes last fair value. Forget about that hourly. 15 minutes last fair value. So you want to see it's broken from 15 minutes. Once it's broken, you can utilize the same fair value gap as a inversion fair value, the way I have showed from ICT's recording or video just earlier. Okay, so wait until that happens, frame the new sell short setup. Yeah, so my idea is, when I'm expecting something, okay, for example, I did the same thing. I was looking forward to how market is trading that fair value, if it's giving us any sell short or not. But by the time it was reaching there from 6 between 7:30, I was not getting any bearish structure shift. For example, here, okay, like on that initial leg here, no change in state. Instead, I had what? After trading into a bullish fair value, it has created more bullish PDRS, like fair value, fair value, fair value. So I'm not using that candle as a market structure over here. Oh, sorry, here. Okay, just that one single candle. I'll put a line so that you guys can understand exactly where that fall. This. So it's not enough for me to frame a sell short. That's why you can avoid this specific area. There is no low that you are looking at this range that you can mark as a market structure shift. So wait until that happens, until this happened. Another accumulation, buy side taken as the manipulation, and then the distribution happened here. Okay, so in that leg, same thing. Market structure shift you are marking here or here, wherever you are marking it. Fair value gap, breaker, hand side, but it's for a study purpose. Okay, closed below, traded back into the breaker range, continued lower. After the second break of a structure, like this is the market structure shift, this is your break of a structure, you can mark, or even if there is a swing low over here, you can mark that. New fair value gap, see that, partially filled or unfilled, however you want to call it. Is there any liquidity overlapping around that area? Yes. Is there anything that should send the price higher? If there is anything, then this is your target, or even that low can be your target. Already good enough profit. Okay, empty the same way I just framed it, but in this case, if you want, you can cover the fair value gap candle high. So this is how it looks until this negative one, or until that liquidity. At least it will give you that 1 to 2. Okay, so the first leg it has delivered that way. All you have to do is find the confidence where you have to look for it. It's that one. You let maybe that fair value go. See that new day opening gap overlapping with a very small fair value over here? Use that one, because market closed below the new day opening gap, traded back into it, then continued lower. Maybe use this leg, put the stop loss above the candle's high, target the 1 to 2. Measuring gap, similar. Okay, the one I just did over here, it's the exact same thing from here until that sell side. I know it can go until this far before it can go higher, but still I didn't hold, because this is where I'm already seeing more than what I want or what I need. 1:2, it gave me more than 3.5 or something like this, because I believe I entered around this leg. 3.37. Isn't that enough? 43 and more, like I saw around $900 profit from that entry. So wasn't that enough? For me it was enough. See, looking like it's breaking the new day, it's breaking the fair value from 1 minute. Okay, but so far it didn't even close below the new day opening gap. So you are still waiting for market to do that. Wait, the time frame you are looking at, your inversion, your break, everything has to happen on that time frame, not the lower time frame. That's why I'm talking about this area. So be careful about that. Anyway, I'll finish now, because it's been a is the 1059 candle is the OB 1059, this one? Oh no, 1059. Where is it? This one? No, this is nothing. This one is nothing, because it's not trading into any fair value, nothing. Okay, this could have been a possible order block, because it was trading inside of that fair value and that new day opening gap. Thank you for the stream, brother. Good night. Bye. Yeah, thanks. Can you put those links of ICT we was watching today here? Links, I don't really know where I can find the link, but it's on the Twitter. I don't even remember the guy name from where exactly I got it. Oh, by the, have you watched this one? It was like bloody hell. I was shocked. This guy is a smuggler with cocaine. Anyway, I shouldn't be saying those names. I think there is issue with that one. But yeah, like, and look at him. I like it. Yes. I don't know if after this he will survive. This is the guy, okay? And he has now nearly 200k subscribers, nearly 940 videos he has uploaded. I have watched all of his videos, okay, like almost all of his videos, because I like to see how he's feeding people. So I have watched all of them. I don't know, like most of them, not all of them, most of them. And he was showing how to trade with $1,000 to prove it's not a like this sort of thing. But that guy, oh my god. Anyway, yeah, like I shared the link yesterday in my stream, this video link, and I'm very, like, I'm surprised how this I'm going to have a back test today. What? So what I usually do is whenever I see ICT posting something, I look into the comments, and few people post some valuable lessons that ICT have shared before inside of that comment. So I don't really know which one was that where I found it, but I think the name was MMXM Trader. Let me see if I can find or if I'm following him or not. AFX, I'm following back because definitely I know him from my friend's channel. No, I don't really have. And I'm not too active over here, so I don't really expect anything out of this. MMXM. I believe this is the guy who was sharing those videos from ICT. There are some issues, but anyway, it was inside of a comment, man. It was inside of a comment, so I don't really think I will be able to find those videos. You know what, like it's in my since it's in my live stream, maybe just if possible go to that okay, I'll give you the actual title of it, because I believe I have kept a screenshot. Let me just find it from my phone so that I can give you the video title, the exact video title. This lecture is 1 hour 50 minutes deep dive institutional order flow. So let's see. The inner circle, the inner circle. Deep dive. Okay, this is that one. This is the video where he has talked about a lot of things, so maybe you can watch this video. This is 2023 mentorship deep dive into the institutional order flow. I believe I found the video that I was looking for. Even I will save it for not really ICT listen. Okay, yep, that's a private one, but anyway, like I gave you the link over there. This is the one. So yeah, watch this one maybe, and if you're framing any setup, it's breaking that 15 minutes last fair value, so maybe from now on you can look for the new structures and new setups. That's the thing for the sell side. If this 15 minutes candle, which has still 2 minutes left, if it can close below that last fair value, and this can be the thing you can watch from the beginning, that 1 hour 50 minutes, whatever it is. I don't know, like I haven't watched the entire video, or even if I watched, it's been a while, so the informations are already with me, so I know like what I'm talking about. But anyway, yeah, I think I have watched it before, because this boot map he was showing, the order flow chart that he was showing, so he was talking about a lot of things over here. So if you want to watch it, you can watch it from here. It's a 2023 mentorship deep dive into the institutional order flow. Inside of that, everything that he was talking about, it was there. It was there. That breakaway gap portion, how far it was, that see that change in state, that was there. Okay, how you can grid, how you can use the grid levels, the distribution cycle, whatever it is, you can look into that. Okay, yeah, so I found the video. That's the one. This 1 minute candles closer is important. It should not go close inside of that fair value. And it's already the lunch hour, so better if you can avoid. Better if you can avoid. This is the window. Market should clear those sell sides. Okay, I'll take the lead now. I have done enough profit, and the last entry I lost only how much? $115. Other than that, I made all this profit, so doesn't really matter. And yeah, until next time, take a very good care of yourself, your health, and your loved one. If I'm alive, see you all tomorrow after the CPI. Okay. So yeah, love you all. Bye bye, and thanks a lot. Thanks again. I know my stuff. Yeah, I know a little bit, but anyway, I'm trying my best, guys. I'm trying my best. So yeah, see you all tomorrow, and hope it was a good day for you all, and you all made some money using your own setup identification or own analysis, not copying or something. Cause I'm trying to make you guys self-dependent. So I hope that that is the scenario. That is the case. Yeah. So I'll take the leave. Bye bye, guys. Bye bye. And love you.